Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. What's up, everybody? Friday. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we saw another wild day in the markets. We had a live trading room yesterday morning, so many of you that are watching this probably joined us, and if you didn't, that's where some of the lines came from. Real quick about the Daily Market Commentary. Every day we draw our areas and our zones, and we leave the lines on the charts so that you can see how these trades are updated and affected over time, and hopefully this helps you to get better at identifying quality zones and maybe taking action when it's appropriate. So let's go ahead and dive in. So on the S&P this morning, we're down about 84 points as we are just seeing continued moves down in the market that are rather large. And if I move to a daily chart, we can see that we are definitely showing kind of that signs of the next leg that's going to be down is going to come. I think there's a chance that we're going to make it all the way down to this 2,700 sometime next week with our next leg coming down, and that would just about put us officially into bear market territory. It might be one of the fastest bear market territories, I think, in the history. Well, I think it might be in the top 5 in the fastest bear market territory in the history of the markets. But yeah, that officially would be at bear market territory at about 2718 would put us at bear market territory. So we're very close to that number. I think that there's a chance that we could even get there early next week, based on what we've seen. Who knows? We could get there today. Well, I guess it would be tough to get there today. We might have the circuit breakers kick in before that. But seeing as how we're already down 2.8% in the pre-market, so. Now, by the way, it's not always a bad thing if you understand how to protect yourself in these market conditions and to profit on the way down. So here's our level from yesterday's live trade room. This was our 15-minute level of supply that we identified in the live trade room, and price came into this level at 30.80 and has moved down precipitously from that zone. So if you were able to join us yesterday morning, let me know in the comment section below if you caught some of this drop. This was a really nice trade outside of this zone. Now, the reason that we took this level is that we had a nice wick over wick area. We had a pivot, and it was right around the European market open. Some of our most important things that we look for are those wick over wick areas and those pivots. And so now what I'm going to do is wrap my lines around this European market open where we had in the overnight session. If in case we do get a little rally up this morning, that's the area that I would look for. 3,000 is really a strong whole round number, and we weren't able to really do anything around that 3,000 as far as slowing down. But we may, something could cause price to rally up early in the day. This would be where I would look for price to have another reversal. So, really good trade for anybody who was short off of this level. You are, leave me a comment below. Let me know if you're still in it, if you're still riding it down. I know some people still may be riding it down and picked up 100 points off of that move. Nasdaq, same thing. Nasdaq did pop a little bit higher, didn't get above our pivot, right? So if we got our wick over wick, our pivot's up here. We didn't get above the pivot. We did pop up a bit higher in the Nasdaq. And so put in a huge shooting star candlestick for those of you that know that use candlestick patterns. Did get a little bit higher, although on a percentage basis, the Nasdaq is down 3%. The S&P is not quite down 3%, and so you'd have to look to see where are some turning points. If I go to a 15-minute on the Nasdaq level, it's going to look the same Nasdaq level as the S&P level looks about here. So you've got both of those zones. Now, I will say that you have a couple of nice areas in here where we could see price reversing if we come back up into this region as well. Inside of crude oil. So in crude, yesterday, the level that we identified for a potential breakdown was this 46.40, and we were looking for a 2-to-1 reward to risk would take us down to this area of demand. So the breakdown trade worked out exceptionally well. So once again, leave me a comment in the comment section down below. Let me know if you caught this trade, as we got a really clean breakdown inside of crude oil. It came down to our target, which was a demand zone. Unfortunately, blew right through that demand zone. If you tried to pick that one and get long at that area, it did blow through that demand zone. But the breakdown was a very effective move. And so now, looking for the area up above us, I've got a number of different levels that we can look at. Once again, sliding to kind of that 15-minute zone, and we've really just fallen here in the last 15 minutes have been tough on those oil markets, as that's our biggest candle that we've seen. This one's not quite as clean as the equity markets for a reversal, and so with that being said, I'm going to wrap my lines around the area here that was the retest of our breakout and see if that becomes a reversal point. Now, the time of day there is not good, so I'm going to put that as a confirmation entry, just simply due to the time of day. All right, in gold. So in gold, we had a confirmation short, and we did get that short that was triggered right here. So this triggers the short. And then we got to take a look at our 6-candle rule, right? 1, 2, 3, 4, 5. After 6 candles, the market had gone nowhere, but it did give you an opportunity to get out at break even. So the 6-candle rule was in effect there. Opportunity was there to get out at break even. Now, you may or may not have gotten into that one because that occurred during the Gobex session. If you did, it made sense to get in and get right back out. And by going sideways, it sets up for a potential breakout. Now, we are seeing a chance for a little bit of a pullback in gold from this point, as we would get, based on this particular candlestick that we have, and it's hitting off of this prior high. So keep an eye on, let's see if we get some basing here for a potential breakout above that level. If I look at my 4-hour is most decidedly in an uptrend, so I want to be a buyer of a pullback if we get a good pullback into a quality area of demand. Now, if we see a strong pullback throughout the day today, I've got a level in here. But notice there's a lot of demand levels below us. We're just not pulling back far enough to get filled on those levels of demand. All right. So let's take a look at our bonds and currency markets. Now, our bond markets have been extremely bullish. And yesterday, when we were looking at our bond market levels, we looked at this area here for a potential breakout to the upside. Now, we did get a little bit of a breakout here, chopped sideways for a bit before then popping up. So you may or may not have taken your stop and moved it to break even at the end of those 6 candles. 1, 2, 3, 4, 5, 6. So depending on where your actual breakout entry was, you may or may not have gotten stopped out for a break even on this. And if you did get stopped out for a break even, no big deal. You missed out on some of this move coming back up. If you didn't, then you should still be in that position. I would say at this point to move your stop up underneath this area here, which occurred in the overnights. Now, if we do get a little bit of a retest, the origin of the breakout becomes a very good level of demand where we could see price get a bit of a reversal. In the Australian dollar, in the Aussie, so we had a little bit of this 15-minute zone right here. Let me zoom in on this real quick, where we touched inside of this level. Now, if our stop was above this pivot, then we just barely got a touch of that stop out before price moved our way. If you gave yourself a little bit more wiggle room, then you are probably made a little bit on this move down here, and it gave you a bit of a 2-to-1. I would say that in most people, this is going to be a small stop out. at the very least, because your 6 candles are, by the time you get to your 6th candle, remember, we use our 6 candle rule on our entry time frame. And if our entry time frame is the 15-minute chart, then that would be why that level did that inside of that market condition. Now, I will say this. I'm going to leave this line on the chart because this could now become a potential for a flip, right? This could now become a potential for a flip demand zone. So the old area of supply, I'm going to leave in there to see if it becomes a new area of demand. As price comes back down into this region, do we get another little opportunity to re-engage on that move? Because when I look at the bigger picture, the 4-hour, we're chopping sideways, and so it's a little bit less probable either way. So I'm going to leave that flip in there as a potential. Inside the euro, so the euro continued its rally higher. We had looked yesterday at potentially going kind of candle to candle in here, and we got one little touch below to get us a way to get in on that, and then the market just popped right up. I mean, that was, and it made that noise even. Just pop right up. And then we had basing in front of this supply level, and basing in front of the supply level. Remember, every supply level above us is a confirmation entry because we have a strong uptrend. And it's not just a strong uptrend. It is a very strong uptrend as the euro is gaining huge moves right now. So every level of supply has to be a confirmation entry. Every level of demand can be a limit entry. So we did see overnight a very strong move. So looking at kind of where we could see a reversal, we can come back to the European market open and see if that becomes a reversal point. Canadian dollar. So in the Canadian dollar, we have a big candlestick right through here yesterday morning as price came down to this area of potential breakout. We chopped a little bit, and then nothing really gave us an opportunity to get in on that move. So now, as I'm looking at kind of the next phase, we had talked about the fact we didn't have really 3 touches to give us a good breakdown. So the next leg, I think it makes sense just to stay away from this one. It's our 4-hour trend is very much, it's down, so it's definitely a downtrend, but it's not giving me a clean move, and so could still look to take a breakdown if price comes into there. Great British Pound, Japanese yen. So our pound level, we had a breakout trade in the pound as price came up into this level. Now we chopped sideways for a bit in that pound breakout. And with chopping sideways, you may or may not have be still in this thing with it moving. If you took the 6 candle rule, you're probably out at a break even, but that level itself is still there and valid. Now, I would normally wrap my lines around here, except this red candle gave us a bit of a retest. And so with that, I'm going to go a bit lower and come all the way down to this area here for our next opportunity in the pound on a retest. Japanese yen, we had a breakout level here in the Japanese yen on a strong move up, and we really got a good run from here. So the Japanese yen move gave us a lot of opportunity from this area here all the way up into this region. So looking at it, we've got a supply level here. Remember, that supply level has to be a confirmation. So if you're short, you could theoretically be short now. So if you're short, allow price to come back down into this region here, which is where your long would be on a retest. Actually, I looked at here, but the time of day is not good, so we're going to go a bit lower and bring our long back into here as our retest. So this is a Friday. As with all Fridays, you've got gap risk over a weekend. The best way to hedge gap risk is to use options on futures. So if you don't know how to use options on futures, there is a little video that I will post in the comment section to watch options on futures. Until tomorrow, everybody. Until Monday, everybody. I hope you guys have a great day. Remember, Sunday night we still have our free preview week at TradersArmy.com. Join us on Sunday night to see how these markets open. Everybody's welcome to join us, and go to TradersArmy.com today. Sign up for a free membership, and you will be able to become part of it. So thanks, everybody. Hope you have a great day. See you.